Doug Simon from Tredas is our corn and soybean market analyst this week. The U.S. Department of Agriculture expects U.S. growers will bring in the largest soybean crop in history this fall. The agency's latest production estimates, released Thursday, also project the second best corn crop ever. The updated numbers bumped corn's average yield higher to just shy of 172 bushels per acre, while slightly lowering the average yield for soybeans. We talked with Doug Thursday after the report was released and asked for his overall thoughts.
The numbers from USDA today were very quiet. They did cut the soybean yield slightly. They increased the soybean acres. They came back and they increased the corn yield and they cut the corn acres, and the stocks were really similar to what they were last month. But the report was really bullish in terms of prices. Corn was up 6 shortly after the report and 27 cents on the beans. The corn kind of faded back to unchanged for a little bit, but it was a very positive response, which was good to see. I think people were worried that the bean yield might increase. Whenever you look at USDA's numbers, if they increase from August to September, they also tend to increase into October. There was some fear about that. The fact that the bean yield came down a little bit was definitely a little constructive to the beans. More constructive than I anticipated, but that's nice to have.
Can you go through some of the details of the report with ears and pods and some of the things maybe that they saw from last month into this month?
USDA had been using what I would consider to be an outlier in terms of the pod weight, which was very high. It was higher than any other number we've ever had. They did come down slightly on that, and that's what reduced that yield by about a half a bushel. On the corn side, they did increase the yield by just under 2 bushels, and they did increase the ear weights on that. So that's from actual surveys out in the field, actual weights and testing. So I think now that they see that drop in that number on the bean side on that yield, then they start to worry, okay, maybe is USDA going to maybe, because that's such an outlier, are they going to maybe even reduce that bean yield just a fuzz more? Which on beans, reducing a bushel off of 90 million planted acre, whatever it is, just under 90 that's harvested, that has a big impact on the U.S. carryout on soybeans.
2 months ago, when the USDA released its first estimates, people were in shock. They said there's no way this happens, and now we're pretty much at those numbers. The market warmed to it, apparently?
The market believes it now. A lot of the traders and people are out there, but I think also it's easy to look at that in hindsight. If you look at where we were, I know I was here in June and we were talking about the dry conditions in parts of South Dakota. You look at the drought monitor this morning, they're normal now on their moisture. You look at parts of Illinois and Iowa and Indiana, looking at the corn yields in Indiana, everybody was just talking about how wet it was there. They actually increased the corn yield in Iowa, Illinois, Indiana, all those eastern corn belt states. They left Nebraska the same. People are saying genetics. We had a lot of subsoil moisture to begin the year, but we also cooled off pretty substantially during August and early September, had really good rains, and that corn crop had plenty of time to mature. So that's something you couldn't predict in June.
Update me on harvest.
The progress, if you look at the rain from southwest Kansas up into Minnesota, everything north of that's slower. If you look at the eastern corn belt, even though they're behind pace over there, they're definitely ahead of where we are here on percentages. Soybean side of it, actually they're a little bit ahead of pace over in Illinois and Iowa and Indiana, or more toward Indiana and that eastern side, but definitely slow, which is basically kind of spread out harvest. And it's actually made kind of some of the marketing, some of these basis opportunities. We've seen some nearby premiums for quick ship on corn and for beans. It's spread out the amount of old crop stocks that's just been overbearing on this corn market and kept basis depressed. We've seen like ADM Columbus go to 20 under, Blair improved from 28 under to 23 under here this week. So we've seen some little improvements in basis, which has been good.
Describe where the carry is in both markets here and how farmers can use that in their marketing plans.
That's a very important concept to look at. If you have today's corn price at $3.52 in the December, there's about 30 cents a carry out to July, so it's around $3.82. So if you look at selling corn off a combine today into a co-op with a 50-cent basis, you're looking at $3.52 less 50, you're looking at $3 cash corn. But if you look at that $3.82 out into July, and you look at the basis levels maybe into an ethanol plant that could be maybe 10 cents under, you're looking at $3.72. There's 72 cents of difference in that cash price because of carry and basis improvement that you could see out there. And those are definite improvements, things that you can do that are really tangible that you can improve your marketing by looking at. Beans, there's 37 cents a carry from the November out to the July, which is pretty large typically for the soybean market. But again, if you can see a basis improvement and take advantage of those carriers, there's going to be some benefits to storing beans and trying to carry them away from an oversupplied harvest market.
Is there a percentage where you like to be sold right now for risk management strategies?
For the 2017 crop, our goal is to try to sell up to our crop insurance guarantee through June on the corn, beans more into the July, August timeframe. So we're looking at now selling those bushels, or what do we want to do with those bushels above our crop insurance guarantees. With those carries that are out there, that's attractive, and the rally we've had today, it's going to make it more attractive to start trying to sell those extra bushels that we have. We'll really be interested in looking at 2018. December 18 corn sitting at $3.98. We sold 10 to 20% this last summer when we were up in the $4.25 level. We like to always look ahead and extend that marketing period, so we'll be trying to do something for that DECE 18, do a little more there, and do it in increments. We don't do everything in one fell swoop on the hedging side, but try to do increments over time. And when we get north of $4, we think that's a good place to begin.